Good morning, everybody. Welcome to another TopstepTV London session. Let's have a look at what's going on in the markets. We had a totally crazy day yesterday, as expected. Like I said, hopefully you were safe and sized down so you don't dig too much of a hole in your account. All right, so let's have a look at copper again today. I'm going to talk about open sentiment in relation to market profile development. So I wanted to dedicate this today because I find that there's a lot of questions about, how do we know it's going to be a range-bound day? How do we know that we're going to be doing a momentum trade? Like, what should we actually strive to do, and is there a way to figure out which of those two we should be chasing on the day? Now, the way I like to do that is to effectively look at where the market is opening in relation to yesterday's distribution curve from the same session. Now, this is London trading, so I always use a shortened London session to calculate the regular trading hours for London. I don't like to pollute my my open sentiment by mixing and matching the overlap and the open for New York sessions, and that's why I cut the London session at the start of the next major session. So for copper, that will be COMEX. So it's my time, it's 1:30 p.m. And that is where this London value area is calculated from. Now, what is the value area? The value area is nothing more but a distribution curve from yesterday. So as the price starts distributing and moving around, it effectively creates a little belly, and that becomes your distribution curve. Now, the further away from the distribution curve you are, the bigger the chances of the price going back to it. This is what we mean when you hear Hogue and myself say gap rules apply. But there is a little caveat there that if you're very, very far away from value, it's very likely that the gap fill will not come, because those sorts of big opens, in my experience, when you're so far away from the value area, it represents some sort of a new catalyst, new information that's come into the market and sort of put a wrench in the works. So I look at it as more of a repricing rather than, hey, let's fade this. So again, there are details that I like to look at. Now, if we're opening inside value, usually dead in the middle of it or somewhere top, bottom, top third, there's a very high chance that you're going to have a range-bound day. Although you can have a breakout trade, of course, anything can happen, right? But for the most part, I would say that if you are looking to do a momentum trade, you don't want the markets to be opening in balance. Statistically, it's just, how it is. If you are in balance from the previous day, the likelihood is that you're going to end up in that range-bound day. So if you identify that at the start and then look for evidence of that to happen, you shouldn't ever be in a position where you're just like, oh my God, what happened? Everything's going against me. Because technically, if you see the open inside value, and then here's the second component, the initial balance extensions. So if you pair those two up, rather than going, well, I think this is going to go up or down, just see which side the initial balance is actually extending and whether the auction is failing and coming back into initial balance or not. As soon as the market fails to one side of the initial balance, we refer to that as the failed auction setup. It's a very important setup. So once you see that, there's a very good chance that the market rotates to the other side of the value. Now, on a lot of the days, if the market is very quiet or quieter, range bound, you will see somebody like Dolby say, we're in a Doritos pattern. And that's actually a pretty good way to put it. I call those the deep shape profiles. Some people call them arrows. Some people, anything that sort of has that triangular shape. That would be a feature of a potentially range-bound day. And then if you plop in the initial balance as a reference, and you say, well, we've had extensions on both sides of the initial balance, there's a super high chance that you are going to have that range bound day. So that's a very good way to figure out which side of the market you should be looking for your trade, and whether it's okay to go into momentum trade or not. Because for the most part, if you have a range bound day, you look for a breakout. Like, let's, for example, take this copper now. Like, we actually opened slightly below the value area, and it attempted to go higher, but overnight VWAP was so far reactive, so it caused a bounce. So right now, all I'm looking for is which side of the initial balance the market is actually going to extend. And I don't have that. We're just building structure, so we're just printing a consolidation sideways movement inside the initial balance range that happened from 8 till 9 a.m., which is the first hour of London. And this is the main reason why I typically don't look for my trade setups inside the initial balance, and sometimes even 90 minutes after, because I want to see that something called the other time frame participants stepping into the market. Now, other time frame participants are effectively institutions, right? They're not market makers, they're not locals. And locals versus other time frame participants, they both have some very different agendas, very different goals. Typically, market makers don't want to take this anywhere. So for me, for now, this is just market makers pinging the price back and forth. And since I hadn't had any extensions of the initial balance, I also don't want to get involved in that just yet. So I'm going to stay patient here with copper. I've been looking around. There's a chance that our Bob might be going into a gap fill, because it did open far away from value. So maybe there's a trade there, because it looks like energies might be the ones to focus on. So we'll see what happens there. I would like to see a committed move below and some single prints left behind as well. DX Corp says, do you still use initial balance? I use it every day. That's something that I've just explained. So yes, I do use initial balance. I do use the value area. I do use the concept of single prints. You have some other concepts that effectively talk about a very similar thing, like ICT calls it the displacement. So displacement, from what I can tell, not that I've studied it, is basically just that. It's a very strong movement away from an area that leaves sort of a liquidity gap away from the level that we were located before. And typically you shouldn't go against that, because usually there's some sort of momentum in play. And then if you pair it up with all these other things, you can actually get a pretty decent idea of what's going on. Now, if you don't get any momentum and you keep getting chop, that's a whole different problem, right? But some of you trade equities, a lot of you trade equities, and lack of momentum has not been a problem. But lack of momentum has actually been a problem in crude oil for me this year, because it's, every time I try to do anything, it's sort of very just slow and range bound. And that was never really a feature of the energies market. So I'm not exactly sure what is causing that lockdown, whether it's just a general insecurity. We should have seen some more dedicated movement, but for the most part, from what I can tell, is that a lot of energies tend to move overnight and and metals in particular, they tend to move overnight, and then by the time their main session comes, they're sort of locked down. So if I show you yesterday's New York session, it was so wicky. Like, I actually tried trading crude oil yesterday, and it just wasn't giving me anything. Like, this was all, like, we had a decent range, but for the most part, unless you caught the move right at the top, which would have been, very, very difficult. And also this was right before lunchtime. So this was actually Euro close reaction. That was it. And then you kind of had a bounce from VWAP, which again, this is something that's changed on crude oil. VWAP was never that reactive. In fact, a lot of the times it would just ignore it completely and go through it. So I used to use it as a target and never really as a starting point for any trades. So yeah, crude oil is still doing weird stuff, and then it goes into a really nice trend overnight. Now I'm asleep overnight during Asia, so whilst I would like to be somebody who doesn't sleep at all, I do need my sleep. So for me to stare at the markets all evening, that's just going to be a disaster. But yeah, so it's been certainly interesting to observe this new world order, so to speak. And yeah, so it's something that I'm looking at from a more research point of view, because I've traded crude oil for 11 years, and even though it goes a little bit quiet every so often, within about 6 weeks it sort of comes back to its standard of 180 to 220 ticks per session during NYMEX. We haven't really had that. In fact, only in the last sort of week, we're knocking on that 180 NYMEX average session range. So that's a good point. And I do have this additional measure of volatility that I like to look at for crude oil, which is kind of a crude oil VIX, right? And it's kind of climbed up to 43. Now that should open up the possibility for some really nice intraday moves, but sadly all of those moves that seem to be happening outside of the main trading hours, so that's a bit weird, right? But yeah, we'll see how long that lasts. I'm still very, very skeptical about crude oil because it has been doing some very odd things. Let's have a look at some other markets. So maybe look at gold. Okay, so Mike Sweeney says, hey Dee, when looking at gold prices, is it better to trade off futures or spot price with psychological levels? Just trade off futures, because spot prices are one thing, but we are trading futures. So, if you're looking at how the institutions hedge their positions, which is what futures were initially made for, they would use futures prices. They wouldn't use spot prices, right? So for me, if I'm trading something, I want to see how the prices react in that particular derivative rather than going to a million other things and then going, well, which one is it going to be? It kind of comes back to that keep it simple idea rather than looking at 3 different charts and going, well, which one is a psychological level? You're trading futures, so just use futures as a reference. And even when you look at the ladder, you will see a lot of the orders will be around those psychological levels in futures, not in spot, because that's what they're trading, right? Especially for anything that has a physical product underneath, which is crude oil, which is gold. So anything that is an actual commodity, actual physical product. Michael Bruneman says, can you please tell us your value area and price from yesterday, London session? So for which product? Do you want it for copper? Or I'm happy to do that, but just let me know which one would you like to know about. I'm just going to open up YouTube as well so I can keep a little bit more track of chat. Leah says, hey Dee, love your glasses. So in Topstep I can only see one bid size, one ask size. How do you get one like yours where you have 10 of them showing? This is level 2 data. So if you go into your Topstep dashboard, so not the Topstep X, but actual website where you have your profile, go and get level 2 data. But, it is $39 for the platform. So if you want to have it on Ninja, on Topstep X, it's going to be $39 for each of those in order to get level 2 data. Now, Comper is something that is not traded that much, so it only has 10 levels. But if I drag out the dome for dome, however you want to call it, for ES, you're actually going to see 100 levels deep, right? Look at that. Let's have a look at NQ. Same thing. Ooh, NQ gappy again. What's happened there? That's not good. That is not good at all. Let me have a look at NQ because it looks like we have another very unusual day because that is very, very thin, guys. And whenever you have a thin DOM ladder, what can happen is some very violent moves. Yeah, so it's, oh man, that's moving again. That's going to be trouble again today. Yeah, but the point being is that you get level 2 data and you will get 100 prices deep on some instruments where you can look at level 2 data. Now, I like to look at it from bookmap side because it just visualizes it a little bit more in like an easier way. You know, you can see levels better. Okay, so for copper, Michael, for copper value low, for copper is right sort of where we're now located. So it's 399.29. Value high is 409.49. So all the way up there. And then you have the point of control, which is kind of the middle, fair value, which can be a good target. So it's 404.21. So for now, we're not doing anything with copper. It's literally just barcoding to the right. So until that state changes, I've got nothing to do on copper. But yeah, NQ thin again. That's going to be very annoying. Martin Vukovic, you sound like you're from my ends somewhere, Yugoslavia. Good morning. Do you, and if yes, what kind of music you like while trading? I don't like any music while trading. I used to be a musician for 20 years before I even became a trader, and I find it very distracting. So, you know, I'm always of belief that some of these jobs that we're doing require high levels of concentration, and if you're going to have one part of your brain sort of doing another thing, it's just not a good thing to do. Trading is difficult as it is, and you know, whenever you go into, like back in the day, you used to have to go into the office to trade. You know, it's not a, you know, mechanics sort of place where you go into a garage and there's like nice little music going on in the background. It's an office, you know, we're doing some very serious things here. And if you're going to be humming along and doing stuff with your brain that you're not supposed to be doing rather than concentrating, it's generally not advised, you know. You wouldn't walk into, like, you know, a test or something, and they would have like music in the background. Why? Because everybody requires concentration. So no, I do not listen to music while I'm trading. And then if you are a musician, you always go to the analysis of the music rather than the chart. So for me, that's a big no, you know. TX Corp says, from your experience of 11 years of trading during the London session, which product has great volatility volume? DAX, but we don't have it in Topstep yet. They're working on getting it. DAX is my primary thing, and in the last sort of 2 years, it's actually been my bread and butter. So that's actually something that's saving my private account at the moment. But yeah, we don't have it in TopstepX. They are working on getting Eurex products generally. So let's have a look at the DAX chart for a minute. Now, the reason why DAX moves so well is because DAX trades on the Eurex exchange and London exchange as well, right? So the majority of its movement is expected to be done during the London session. And then on a lot of the days, you have a reversal for the New York session. So it can move just as much, but I find it very smooth. And it's one of those products, because of the smoothness and lack of jitteriness, you can really size up on it. So this is why I absolutely love it. And, even now, I probably do anywhere between like 17 to 25 contracts, but it's a smaller market. So it's €5 per tick. So it's not like it's 10 or 12.50. And it's not as crazy as NASDAQ, but it does have this very nice, smooth way about it. So it doesn't make me nervous. Once you're in a trade, you can very easily track what's going on without too much emotional involvement. And, I can't wait until we get Eurex into Topstep. But caution, because DAX does have moments of being quiet. And like with anything else, there is a DAX VIX that I like to track quite frequently. I like to see DAX VIX over 17, and we're now over 26. So that's actually a pretty nice sort of market conditions for the intraday trading purposes. So that's one thing that I want to see before I go into momentum trading with DAX. Otherwise, I would I would really keep an eye on that VIX in order to identify whether momentum trading is even okay. Caesar says, this is my first time trading NQ in August. Is it normal to see the market so thin in August? Seems we started this month and the market dried up. It is not normal to see gaps in NQ. This is all a result of, I think it's a combination, like I said yesterday, it's a combination of bad numbers that came out of some of the leading indicators that we had last week. NFP, jobless claims, unemployment. And then we also have the potential with war in Iran, right? So they were talking about World War III. Then we had like the whole Trump attempt assassination. That I think everything just sort of condensed into an event that is sort of now leading into a potential for recession, as well as a war, as well as a whole bunch of other things. But so let's put it in perspective. I think Jack was talking about this yesterday as well. He said that this sort of movement we've seen during COVID, we've seen during the credit crunch, it's something that happens when a black swan event is happening. And usually if that's happening, any normal person outside of trading will know about it. So that's what usually causes these types of dry ups in liquidity. But I did warn about 2 years ago when I was doing daily live streams on my own channel, I warned people that super liquidity like we've had over the last 3-4 years in NQ and ES for that matter, it doesn't last forever. When I got onto the prop desk, they tried putting me on an equities desk. And do you think that NASDAQ and ES were moving 1 million ticks per day? No, ES was moving 12 ticks for the entire day. And NQ wasn't too far behind. It was a little bit more liquid. But we're talking, 2,000 ticks in a day. That's not going to last forever. And if you're somebody who only chases momentum trades, it might work for a while, even for a couple of years, but at some point we're going to get back to norms. And we have to, as intraday traders, we have to learn to trade quieter markets. We also have to learn to trade range-bound markets. If you're constantly in a range-bound market and you're constantly going, well, price action is crap, get better. Only if it dies out completely, we can say, yeah, this is not going anywhere. We're chopping around in a 5-tick range. And at that point, you might look at options plays. There's ways to take advantage of the premiums rather than looking for momentums. You effectively become an options writer, and then you just reap sort of premiums. But that's a whole different topic. So there are ways to profit in almost any market environment. with some critical thinking. But yeah, so let's carry on. This is definitely not normal. Martin Vukovic says, I asked exactly because I know you're a musician like your father. Yeah, my father was actually a very famous musician from end of 70s and throughout the 80s. So I was born in all of that. So yeah, good to see people from former Yugoslavia here. How do you prefer bookmap set? Okay, so I'll show you. So I prefer my bookmap to have the cumulative candles, not split, but actually showing me who won, right? And then I also have the cumulative delta for the session down at the bottom, which sometimes plays into decisions of fading the moves for the day or the session. So usually playing that into some sort of a close. So either Euro close or electronic close, Globex close. Not so much during the active trading hours for the earlier part of the session. And then I have overnight VWAP on there as this purple line. And that's pretty much it. You know, that's how I prefer it. I do zoom out, zoom in as and when required. Depends on what I'm doing. If I'm looking for stop runs, I want to see... Okay, so let's imagine... let me see if I can actually find a good example of that. All right, so on ES we have some levels up, liquidity up at 52.73, 74. If I was looking for a stop run through that, which is something that happens intraday a lot, I would be looking at the dome to identify the areas where all of those orders are kind of nicely set. And ES is a type of a product that likes to run through those orders and then maybe reverse or use them as a springboard. So that will be contextual and depending on where we are and, you know, a whole bunch of other things. But ES is very good to look at those kind of levels because it's fairly obvious. But I've noticed there is this algorithm during the New York session that tracks the price to within about sort of like 5 points or so. So they're kind of hiding liquidity doing that. But as you can see, that algo is not active right now. So this looks very human. So that would be one way of using it. Another way is just to make sure that there's big orders coming into the level. So it's more to do with, like I take my levels from something else, from profile, from average session and daily ranges, from initial balance breakouts and all of that. But once we're arriving at a level, that is when I like to start observing how things are behaving around that level. So are we coming into it very aggressively? Is the market running away from it just before it hits the level? So, and that will be very dependent on the product that you're trading. KC Trading says, hi Dee, thank you for doing this. A question if you have time. Have you read Anna Cooling's book about volume and price action? I have not. I do know about Anna Cooling. She's a great person. I actually follow her on Twitter. And he goes, I found great success with the system as I find volume very important. Do you use it? I do use volume. I have shown this before. Not to any degree. Like, again, I have a system that's worked really well for me for, like, coming up to, like, 16 years now, really. 11 years out of that in prop. But volume is something that I like to see only when, again, we're at a level. So... for example, here's copper chart, and I like to use volume in conjunction with how we're doing around VWAP. So for example, if the price gets to VWAP and it creates these big equi-volume candles, which effectively smushes volume into the candlestick, and that's why I like them, because I don't need an additional histogram to show me where the volume is growing, and that makes things a lot easier. So for example, if I show you a 5-minute chart, we ran up to VWAP quite significantly and then very clearly rejected it. So if I was gonna guess, like Anne-Marie says, gun to my head or fork to the mouth, as we said yesterday, which was really funny. I would guess short, right? But we still don't have that commitment in volume, which is another reason why I'm staying out. It's just going to chop it around, doing absolutely nothing. And until I get that committed volume movement that increases the thickness of these equivolume candles, I don't want to get involved, especially not if it's a momentum trade. If it's a stop run, then what I would like to see is that we get down to the levels of 396 where the market turned around last time. And then I would like to see a run through that, because if it gets all the way down there, it's going to run through it. It goes deeper typically on the second try. And then a reversal. So at that point, I will be looking for a run back to VWAP as sort of a small little range-bound mean reversion trade, if that makes sense. So yes, I do definitely do that. Mikey says, hey, did you use ATR? What indicators would you recommend for a new trader to learn? I don't use ATR. I do use ADR in my own version, ASR, which uses the regular trading hours to trade. So ASR is very useful, especially on days when ADR and ATR are completely busted. So what's the difference between ATR and ADR? Well, one uses gaps for a calculation. So if you have something opening with a gap, ATR is going to consider that calculated into the daily range. So effectively, if you have a gap open on a Monday, all of your average ranges will be busted according to ATR. But ADR doesn't use gaps. That's the only difference between the two. Now, ATR has a number of uses. Some people use it on a low time frame to figure out the volatility of the candles. That's a very good way to do it. I have my own way of doing it by dividing my average session ranges by a certain number to get my positioning, which kind of leads me into the next question from Naveen. Okay, so I'm going to do a little test of short here on copper. To see whether we get some sort of a movement down as per rejected values and VWAPs. So what's that? That's 97.85. I'm just going to put my risk reward tool that I literally just hacked a fib tool on MT5 many moons ago. So that's 97.85 here. Nope, that doesn't look right. 90. All right, yeah. Still early. Still very early. Yeah, that looks better. So 97.85. There we are. Wow, more caffeine required. My brain is not taking in numbers. So the next question is about the position sizing and risk. Now, if you have a private account where you have a finite amount of working capital, that's one calculation. If you have a prop account where resets are possible, you can afford to be a little more aggressive, but only a little. Like one of the things that I found myself doing recently is that I'm kind of sizing up like a lunatic because I'm kind of treating the same thing as my sort of bigger accounts, and it's like, what am I doing? So here's the calculation that I use. So whatever. Now I hear that Topstep is going to be removing the daily loss limit. So let's just talk about the future and how things are going to be in the future. You want to take the maximum loss limit and divide that by 10, especially for the first parts of the combine, right? So when you don't want to put yourself under, I mean, I know that we have resets and stuff, but ideally you don't want to be, especially if you're buying 150Ks, like that gets expensive really quickly, right? If you just have to keep buying resets. So if you have the maximum loss limit of 4.5K, divide that by 10. So on the first few days before you have a buffer, make that into your personal daily loss limit. So just 450, maybe 500, right? And then size down accordingly. Now, I don't know how many trades you do per day. I don't know what you trade. I don't know your stop size. So I don't like telling people, hey, do 3 trades, do this. I can tell that to my market stalkers who have studied with me. So we all kind of follow the same system. But I can't, I don't want to put people in boxes, because some people would do 50 trades per day. Other people would do 1. Everybody's very, very different. But just by controlling your daily loss limit in such a way, divide that loss limit then by the number of trades that you're doing. So if you're doing just 1, you can do 2 lots, 30 take stop. That's your trade. But for somebody who's doing 10 trades per day, then you have to divide 500 by the number of trades that you do in a day. So you divide that by 10. Obviously, you get 50 per trade. So what's that going to mean? It means that your risk per trade is 50, which immediately puts you down to micros. The more we trade, the less risk per trade we have to have. Because if you're going to be sizing up and you're doing 30 trades per day, first 3 trades don't go according to plan and you're done. You're at the daily loss limit, and then reset, right? Now we have like I said, they will be removing the daily loss limit. So you will have to find your own daily loss limit if that's what you want. Otherwise, you're not going to last long in a combine. You're going to last like a day. And I know that for some people who have been funded before and they also lost XFAs and stuff like that, well, consider that rushing ahead doesn't get you anything. And look, I've done it as well, right? We've all been in the situation where, oh my God, Topstep, now we can get funded in 2 days. Let me size up and get the 4.5K today, 4.5K tomorrow. And then what happens? Day 1, daily loss limit. We now have daily loss limits. Well, without the daily loss limit, you'll be at the maximum loss limit. So it's only going to last you a day. And the only thing that happens, you prolong the pain and expense. That's the only thing that will happen when you're rushing. So not only that you're going to have to buy another combine or a reset, you're actually going to spend longer trying to pass in 2 days than if you were to just be sensible and make it last and pass in 10 days instead. I actually don't like the fact that they've done this, because I'm kind of the thought that I know how I behave, and if I see, I can pass in 2 days, it plays on my mind, and I'm like, let's size up. And actually, when they had 7 days minimum before you can be funded, I knew that I'm not going to get funded in 7 days, right? So it naturally makes you slow down. But since the entire industry has gone completely nuts and they've gone to, pass in 1 day, here's an account for peanuts, like a whole bunch of that. Obviously, we have to go with the time. So I can understand why they've done it. But from my perspective, I still behave as if the combines still take 7 days before you can pass. And, it makes you not rush, it makes you size down. And typically on 150K, until I have a buffer, I don't want to trade more than 1 lot unless I can really limit risk. Like usually I like to use 30 to 40 ticks for a stop if we are in a market that is moving 300 ticks per day on average. But if I can, trade at maybe London and I find that I can use a 10 or 15 tick stop, then I will size up, right? So it's down to just kind of risk control. But again, I'm not here to tell you how to trade. I'm just telling you what has worked for me in the past. And dividing that loss limit, whatever it is, whether it's a daily loss or a maximum loss limit, into a number of days that you can trade before you can completely derail the account, that generally tends to be the right way to do things. And then obviously you have to ensure that you can bank. If you have a day, if no winning day is over 500, then maybe a 150K combine is not for you. Go for a 50K and use the same sort of logic. What is my trigger to enter a trade? Well, that will depend. It depends on the type of a setup. It depends what I'm trying to do. Like, for example, right now, copper trade is a breakout trade. I am looking for a break of the initial balance. So trigger for that is a break of the initial balance, which is exactly where my entry is, bar a few ticks. Now, it hasn't gone into a momentum trade, but it's still just about hanging below the 9 EMA on a 5-minute chart. So let's see what 1-minute chart is doing, because that's something I also look at. And the 1-minute chart is also showing that we're still creating lower lows and lower highs. So that's something that I track as a part of my situational awareness. So that is one entry into a momentum trade. If I'm looking to enter a fade, I might wait for a full 15-minute reversal before I enter, especially if we had a single directional trading day. I really need to see some commitment behind that reversal to fade a move. And then there's a second type of move, which is a stop run into a mean reversion. Now, this is a range-bound trade system strategy. So if I were to get stuck in the range-bound day today, this would mean that my current trade would be on the wrong side. And why is because on a range-bound day, initial balance edges and session highs and lows frequently get these stop runs through them. Now, that is a different way of doing things. So if I were looking for that, I would be looking for a stop run probably through that Asia high lower down around 96. So I would be looking for a stop run and then very fat sort of exhaustion volume candle on this 1-minute chart. And then also the next candle to have even more volume inside it and to cross over the 9 EMA with a big old volume and then not to have any wicks in it. That would be my entry into a range-bound stop run trade. That's actually the trade that me and Dobie did on crude oil on the house account. That's what we were looking at. And that's the exact trigger that we took that on. D, do you add to a winning position? If yes, how do you add to it, but how much and when? When I try to, okay, so I don't add into positions, especially not on prop accounts. The only time I will add into a position would be if I can't get filled all in one go because of the position size I'm trading. Now, in the past, when I worked for a prop firm that was really sizing up people, I had to fill 120 lots in golds. And there is no way you can fill 120 lots in one go in gold. And I'll show you why. Because if you look at the dome, here is where adding into a trade steps in. None of this business of adding into a trade when you're in with 1 lot, 2 lots, and I'll explain why. But look at it. Per any price point, the maximum you have around these levels is like 4, 9, 10, 12. What are these? They're units available per every single price point. Now, here's another thing, how the clearing houses work. The smaller the position size, the further ahead you are in the queue. So the smaller positions will be executed first. 1 lot, 2 lot, 3 lot, 5 lot, 10 lot, 15 lot. That's all small, right? Institutionally, that's all peanuts. So even when you see these big swingers, you know, they are trading size, that's nothing. They're like tiny pea shooters sort of thing. Like you look at the positioning in institutional trading, we were all trading over 100 lots, you know. So executing a 100 lot trade cannot be done in one go. So that's where adding into trades, and if you've seen Dolby do it, that's how you would do it, right? So Dolby Time does this thing where he has a zone and then he just partials a whole bunch of trades inside it. He still has an invalidation point. So rather than going, and by the way, if you are with other prop firms, some of them prohibit that, right? They don't want to see that because in their eyes that's like gambling, but it's not gambling. It's just literally like averaging around the zone when you are trading size. So, you know, it's a little bit annoying that that's happened, but you know, Topstep, no problem. You can size up, add into a zone as much as you want. They don't care. So let's say if I was, let's say this trade, right? So I have one lot at 97.85. Now I'm probably going to derail this this combine by doing this, but if let's imagine that each of these are about 10 lots. So I need to do 100 lots within a 31 tick range. So I would say, okay, so this is my aggressive entry. So that's entry number 1. Let's say it was 5 lots or 10 lots. Let's say it's 10 lots. And now it's going to climb up a little bit. So my next entry would be into the third of that zone. So I would sell again. And that now averages my price further. Oh, sorry, that's gold. Again, morning, guys. Okay, here we go. So now I average in with another contract. What does that do to the average price? It improves my price. But again, you cannot be doing this willy-nilly, right? The third entry point for me would be in the middle of the entire zone, so somewhere around 98.80. If the market moves away from me, I will have another entry, which is aggressive, which would be a possible stop sell. So sell stop through these lows, which would then get me into another position. And that is the only way that I would be partialing my positions and going into multiple lots, adding into positions only around a zone. And here's why it's not a good idea to add into a position where you're only trading one lots. When you have a level, presumably, let's say VWAP, something super simple. So we're trying to sell around VWAP. So you enter one lot. The market moves heavily against you. You add another lot. What does that do to your price? It increases your position size by 100%. And now you're no longer at VWAP. Your entry is somewhere in a completely different spot that has nothing to do with reality. And unless you have another good way to limit risk at that point, like the structure, there is no trade there. All you've done is you've increased your risk by 100%. Is that smart to do? No. So anytime you're adding into positions, I wouldn't even add, like if it was just me trading my own account, I wouldn't even add until my default position size was 10. And then I would start doing like maybe 1, 2, 3. Because that way you're not affecting the average entry too much. Because it's like only the 10th of the original position. But obviously this is prop trading. You have people who are extremely aggressive. And they just go in and in and in and in. And they add like lunatics. And of course, then what happens a lot of the days when we don't have a crazy momentum, the market turns around and they're at the daily loss limit before you can blink an eye. So, you know, if they're happy with that, I'm happy with that. But I could never do that unless my account is true 6 or 7 figure size, unless I have a very thick buffer underneath. I would just stick to 1 and 2 lots and not add into anything. If you want to mess around with adding things, maybe go to micros, but keep in mind that the only way that I would consider it effective was if you have a zone in mind and then you have a couple of entries that are into the level that averages the price to a better price, thereby reducing your overall risk, not increasing it, okay? And while some people are like, oh, that's a moron trade. No, the moron trade is if the price is going completely against you outside of your zone, is broken out of your zone, and you keep adding to it. That's a moron trade. There's a very big difference between moron trade and averaging into a position around the zone. We have to separate those two out. So what Dolby does, he averages into a zone, but he still has a very defined risk when he's doing it. So when the whole position, all of the add-ons that he's add-ins and averaging in that he's done, once it runs through his stop, he doesn't go chasing. He doesn't go, oh, I'm just going to add some more. It's a defined risk, right? So that's why I consider that a very big difference. So if you're not successful adding into a trade, don't do it. Just have one level, enter, you're done. It's actually going to make you into a better trader to really commit to what you're doing in one size. And look, I've been affected by the whole leaderboard as well, right? It's completely like changed my mindset. I'm trying to get back to my old self. And so I can understand that we all want a lot of cash. We all want to be on the leaderboard. We all want to be yesterday's best. We all want this. We all want that. But the truth is, we need to pay attention to what we're doing, and if averaging in and adding on to a position is not working for you, it's not for you. It's not for everyone. So hopefully that will help. Jesse James, good to see you. Good morning, Dee. How are you? I'm very well, thank you. A little bit still sleepy, but yeah, my one of my dogs was being a bit annoying. He kept trying to climb up on me, and I was like, get away. So I didn't actually get much sleep. Is there a day during the week that is your favorite, or is every day your favorite? I love what I do overall. I find markets endlessly intriguing. This is why I've stuck with them for 16 years. No day is the same. But I can't tell you which day is my least favorite. So I don't have a favorite day, but my least favorite day is Wednesday. Why? Because we have, and if Andre was here, he would tell you, he would know the answer to this. It's because of the inventories report on crude oil. While it's the biggest release that we can have ever in crude oil, what it is a whole bunch of whipsaw and then a nothing burger after that, instead of giving us a nice movement afterwards. So that is why Wednesdays are not my favorite. But it's just one of those things, It's not that it's like, oh, I hate it. There is always some kind of an opportunity after that, but you have to wait for like 4 hours. So it's no different than any other day. I'm just slightly annoyed when when a release should do something and then it doesn't, and it should be a catalyst, but it's really just nothing. So that's why Wednesdays are not my favorite days. But yeah, trading in general, I love what I do. I can't wait for Mondays. I don't like weekends because of that, because there's no markets to trade. And don't tell me to trade crypto, because no. What's a point worth in copper? It's $12.50, just like ES. Is this normal movement for copper? It seems a bit slow. It is slow. Yeah, this is slow, but sometimes London is slow. Technically, this is an out of hours market for this particular product. So yeah. Like I said, I prefer trading DAX. DAX right now is going into a value acceptance down. We do have some average ranges down there, so there's a danger that we ping back from value high, so it's either or. But right now I don't have any dedicated trigger entry. So I'm going to wait until that develops more. And I'm just going to see what's happening on the weekly chart. Okay, so we jumped off a cliff there. Reacted from nearby demand. And still looking very bearish on the daily chart. So gap fill into value acceptance maybe. That could be a play here. And then another crazy day of low liquidity madness. We'll see. Naveen says, got a D, thanks for that insight. But with all this plan, when we start trading, some of us become lunatics and can't follow discipline. Well, that's what you need to work on. Have you tried doing some lifting weights, like doing resistance training and just lifting weights until all of your glycogen reserves, which is the fuel for fight or flight response, which is what you're explaining. Have you tried doing a heavy workout and then sitting down to trade, rather than sitting down to trade and channeling all the glycogen and adrenaline into your P&L and then ending up on the daily loss limit? So that's my advice, right? Go and get rid of the fuel for the fight or flight response. And, you say things like, oh, we have the plan, but then when we start trading, we turn into lunatics. Well, I'm sorry to tell you this, but maybe trading isn't for you, if that's how you're behaving. Like, would you actually do that to your bank account? You you sit down to buy some stuff on Amazon, and then you just buy a whole bunch of crap and you completely waste your entire salary in one day. You go crazy, right? Do you do that? And if you don't, well, why not? It's the same thing, right? So think about how you behave in other areas of your life where money is concerned. Do you buy stupid gadgets? Like, there's a new phone comes out. Do you have to have a new phone? Like, why? Does your business depend on it? If not, you don't need a new phone. That's gonna, set you back like $2,000. Like my phone costs a lot, but I do use it for business, and now I've started using it for cameras as well because it seems to be a better technology than all the stupid webcams out there. But if you don't have that as a business expense, then, do you buy stuff? If you go out to a bar to buy some drinks, if you are with friends, do you keep buying everything on the menu until your bank account is empty? Or do you have some self-control and you go, well, actually, I'm probably not going to go for a $300 bottle of wine and Wagyu beef. You have some self-discipline there, presumably. And, why come to the markets and just go, I'll turn into a lunatic when I trade? Have respect for the money. This is money. All of this. It might be numbers on the screen right now, but when you start getting payouts and stuff, it becomes real. So, and at that point, you realize how real it is. You're like, oh, damn. So, we are throwing around numbers. We are in a high-moneyed environment. And, a lot of the people don't see this as real money. This is why we get stories like the guy yesterday was up 56K, down minus 3K on the day. Like, what's that all about? That's not rational thinking. You cannot be up 56. And, one of my biggest days was 86 grand on crude oil. And I actually took that at the high mark. So I didn't go, I'm just going to keep trading after that. Or, if it reversed, I'm not going to go, well, now I'm going to try and catch it the other way. It's enough. It's enough. So let's just try and put the perspective of these, for example, you get a 150K combine. You have $3,000 risk limit per day. $3,000. When in your life, if you have ever spent $3,000 in one day on anything, not buying like a car or not buying, stupid things, but have you actually spent $3,000 on anything in your life in one day? If the answer to that is no, that means you need to start looking at this in the same way. It's a lot of money to lose in a day. So I'm going to leave you with that thought, and I'm going to, see what I'm going to do with this copper trade because this sell stop just triggered. But that's it for the day. So think about the numbers on the screen versus how you behave in real life, and would you ever spend that kind of cash in a real world environment? Okay, and maybe, just maybe, that along with weightlifting, might stop you from turning into a lunatic and derailing your entire account in one day. Thank you for being here with me. It's always a pleasure to do these. So, I'm going to start bringing in guests very soon. But thank you for watching. Make sure you like and subscribe to the channel if you're not already subscribed. But make sure you get those likes up. And I will see you guys tomorrow again for the London session. One thing I will say, we moved Market Talking with Dee to Thursdays, so that's now Thursday 1 p.m. And I will be on Fast Markets tomorrow after my usual London session. So again, thank you for watching, and I will see you then. Enjoy the rest of the programming.